This week, we've had quite a rough week for investors. First, we've had stocks tumbling, and we've had also the dollar having some gains. My name is Samson Mzera, and that's what we're going to be covering on this episode of the Market Watch series, where we talk about the news, the charts, what to expect, and what is happening. So be sure to like, comment, and share this video for more. The US dollar this week has experienced some gains. And if you look at the charts, for example, the pound, we've seen it weaken. We've seen the euro weaken against the dollar, also New Zealand dollar and other pairs such as the Canadian dollar. Now, this is happening despite looming cuts in the market, because the Fed is going to come in anytime from September to issue its first cut for the year. Yeah. So the question is, first off, why is the dollar strengthening despite the fact that we might see interest rates? And how long will this strengthening or this strength last in the markets? So that's the big question you're trying to answer right now. The first thing we need to look at is the US economy. And if you have a look at it, we've had for the biggest time or for the longest time this year, stocks on a rally. We've had investors piling into AI stocks specifically. And the major reason is everyone believes AI is the future. So we've had stocks like NVIDIA, which provides the infrastructure for these AI products, rallying and carrying the entire market. Investors have been pretty confident, and that's why we've seen major indices such as the NASDAQ, the S&P 500, and even the Dow Jones rallying to new highs for the year. However, things have started to look a bit shaky because now we've started seeing a lot of AI products coming up. We've even had AI assistants that were not very useful. We've had AI chatbots in almost every major software application you can think of. And investors are starting to remember the .com and the Bitcoin bubble, where everything was a .com, everything was involved crypto, and people are starting to have doubts with that. And that's why this week, the market, or last week rather, last Friday, the market was shaken up a bit, and investors are starting to pay a keen eye on these tech stocks that have been playing the leading role for the better part of this year. Taking a look, for example, at NVIDIA, which was the crown jewel of this rally, it's now down 20% from its peak this year. Other stocks are also down, including Microsoft, Apple, Google, and Amazon. And this seems to be affecting now the entire market, where investors are now starting to question whether these AI products are really adding any value to these companies. And first off, we had a tech scare last week with CrowdStrike, but then now we've had earnings season. Tesla, for example, reported a slump in quarterly profits around 45%, and Google is also showing signs of slowing down in terms of advertising growth. And now that gets back to the question. Remember, for example, Google has its own AI integrated to the search engine right now, and the question is this really adding value to the company? So investors are starting to look at all these companies in terms of matrices of whether this AI boom is actually trickling down to the bottom line, and whether these companies are becoming more profitable in terms of these products, or we are still prospecting on future expectations when you expect it to have an impact sometime in the future. Now, if you look at the charts, first off, we'll start with the S&P 500, where it has broken structure. There has been a change of character on both the 4-hourly chart and the daily chart. Investors or traders are now looking for any key retracements that will lead to a continuation of this trend. However, there has to be a lot of caution as there is still prospects of growth in this market. So the other index to look at is the NASDAQ, and this has also broken structure. We've seen it officially come into a downtrend. This is not to confuse it with a bear market. We are in a downtrend in the NASDAQ, and it has broken a few key levels while at it. Now, we will be focused on any imbalances that form so that we can see any signs of a continuation in this trend. The sell-off of these stocks is why you're seeing a lot of investors rotating, number one, into cash positions, and this is why the dollar is now picking up, and some investors also rotating into smaller cap stocks that have been for the long time neglected. So this is what is making the dollar and the dollar index a bit steady for the better part of this week. Now, if you go to your currencies, you can see, for example, the GBP USD has been declining. In fact, it has broken a key level on the hourly chart, and this morning it has been retracing. So we're trying to see signs of a continuation. However, that key level still holds, and it's important going for the rest of the day as we await more news. The other chart we're looking at is also Euro USD that has been in a very tight range. So in this case, based on what happens today at 4:30 with the news, we might see either a break above this key level or a breakout below this key level. Now, these two key levels are very important in determining how the trajectory is going to be next week. Now, the big question is this going to be sustained? Are we going to continue seeing stocks coming down? Are we going to continue seeing the dollar in its current trajectory strengthening further and further? And the answer to this is looking at what the market is expecting in the long run. Number one, cuts are looming. We are still expecting that in September, we have this first cut from the Fed, and that might serve as a potential factor to weaken the dollar in the long run. We're also seeing that the US economy is still pretty much very firm. The numbers that are coming out are not so bad, and this means there is not so much reason to believe that the economy in the US is going down anytime soon. And that's why there's more reason to believe that, for example, for stocks, this might just be a correction in the longer bull run that we're currently experiencing. Because remember, in each year that we've had the Fed easing, stocks have not been so bad, and most of the times they end up performing really well, especially when the environment starts to ease. That is, we have lower borrowing costs and a sort of less tight financial environment. So it might serve as a reason to believe that we are witnessing a retracement in both the S&P, NASDAQ, and the Dow. So traders should be keen on watching out for key levels in these indices. For example, on the Dow Jones, as it approaches that major support level, traders should be very interested in seeing, are we going to have a break below? That is, a close below that major level, or are we going to see the market be hesitant to go lower from that point? So there's still a huge possibility that stocks might hold and that we are seeing a retracement on a bigger time frame such as the daily, and this might lead to profit taking and a bit of relaxing before we get into another bull run. Thank you for staying tuned in this episode of the Market Watch series. If you want to trade any of these instruments, the link is in the description. So you can get access to the DXY, the pound, the indices, and all other asset classes in the link in the description. Thank you for tuning in, and see you in the next one.